You know what's fascinating? While everyone's been obsessing over Bitcoin and tech stocks, something extraordinary has been happening in the silver market. And I'm not talking about some minor price movement. I'm talking about a structural shift that's been building for 5 consecutive years. A shift that has some of the smartest money managers on the planet quietly repositioning their portfolios right now. Let me paint you a picture of what's actually happening behind the scenes. Silver just hit levels we haven't seen in decades. We're talking about prices that have more than doubled from where they were just 5 years ago. But here's what most people don't understand. This isn't just another commodity rally. This is the beginning of what could be the most significant precious metals move of our generation. And the reason why is actually quite simple when you break it down. For 5 straight years, the silver market has been in what's called a structural deficit. That means the world is consuming more silver than it's producing, every single year, for 5 years running. Think about that for a moment. Imagine if your bank account was spending more than it earned, year after year after year. Eventually, something has to give. Now, you might be thinking, okay, but commodities go through cycles. This is probably just temporary. And normally, you'd be right to think that way. But here's where silver is different from almost every other commodity on Earth. Silver isn't just a precious metal. It's not just something people buy for jewelry or investment. Silver is absolutely critical to the modern world in ways that most people never even consider. Every solar panel that gets installed on a rooftop contains silver. Every electric vehicle rolling off the assembly line needs silver for its electrical systems. Every smartphone in your pocket, every computer, every 5G tower being erected around the world, they all require silver. And here's the kicker. There's no substitute. Engineers have tried for decades to find alternatives because silver is expensive, but nothing else conducts electricity quite like silver does. Nothing else has its unique combination of properties that make it indispensable for modern technology. So what happens when you have a metal that's absolutely essential to the green energy transition, to the electrification of transportation, to the expansion of technology infrastructure, and you're mining less of it than the world needs, year after year after year? The math is actually pretty straightforward, but the implications are staggering. Let me take you back to a moment in history that might sound familiar. It was the early 1970s. The United States had just severed the dollar's link to gold. Inflation was starting to creep into the economy. People were nervous about the future of money itself. And silver was trading around $4 an ounce. Within a decade, silver hit $50 an ounce. That's not a typo. $50. A more than tenfold increase. And you know what's interesting? The supply deficit we're seeing today is actually worse than what we saw back then. The industrial demand is exponentially higher, and the amount of above-ground silver available for investment is a fraction of what it was in the 1970s. But let me tell you what's really keeping the big institutional players up at night. Central banks around the world have been on an absolute buying spree when it comes to gold. They've been accumulating at record levels. Russia, China, India, Turkey, they're all loading up on precious metals like there's no tomorrow. And while gold gets all the headlines, silver has been quietly following the same trajectory, because these institutions understand something that the average investor doesn't. They understand that we're living through a fundamental shift in the global monetary system. The dollar's dominance is being challenged in ways we haven't seen since World War II. Countries are settling trade in their own currencies. They're creating alternative payment systems. They're diversifying away from dollar reserves. And when that happens, when confidence in fiat currency starts to waver, people don't run to stocks or bonds. They run to real assets. Things you can hold. Things that have been money for thousands of years. Now, I want to pause here for just a moment because this is important. If you're sitting on retirement accounts worth $100,000 or more, you need to understand how precious metals can fit into a tax-advantaged strategy. I've put together a comprehensive guide on gold IRAs, how they work, how you can get physical metals into your retirement account without triggering tax penalties, and what you need to know before making any moves. It's completely free, and you'll find it in the description below. It's worth checking out if wealth preservation is on your radar, because what I'm about to show you next explains why timing matters more than most people realize. All right, let's talk about what's happening right now in the physical silver market, because this is where things get really interesting. There's a massive disconnect between the paper silver market and the physical silver market. On the COMEX, the big commodity exchange in New York, silver trades as a contract. It's essentially a promise to deliver silver at some point in the future, and the vast majority of these contracts never result in actual physical delivery. They're just paper being shuffled around between traders and speculators. But something unusual has been happening lately. The amount of silver being demanded for physical delivery has been surging. Industrial users are getting nervous. They're not content to just hold paper promises anymore. They want the actual metal. And when you have a market where everyone suddenly wants to convert their paper claims into physical metal, and there's not enough physical metal to go around, well, that's when prices can move very, very quickly. Think about it like a game of musical chairs. As long as the music is playing and everyone's walking around the chairs, everything seems fine. But the moment the music stops and everyone tries to sit down at once, you realize there aren't enough chairs for everyone. That's essentially what's building in the silver market right now, and the industrial users know it. Solar panel manufacturers are locking in supply contracts years in advance. Electric vehicle makers are securing their silver sources. Electronics companies are building strategic reserves because they understand that if silver becomes scarce, their entire production lines could grind to a halt. Let me give you a specific example of how critical this is. A single solar panel uses about 20 grams of silver. That might not sound like much, but when you consider that the world is installing hundreds of millions of solar panels as part of the green energy transition, those 20 grams start to add up real fast. We're talking about hundreds of millions of ounces of silver being consumed just by the solar industry alone, every single year. And that demand is accelerating. Governments around the world have committed to net zero carbon emissions. They've mandated the phase-out of internal combustion engines. They've pledged to transform their energy grids. And every single one of those initiatives requires massive amounts of silver. But here's what keeps me up at night. Silver mining isn't keeping pace. In fact, it's barely growing at all. You see, most silver doesn't come from primary silver mines. About 70% of silver production is actually a byproduct of mining other metals: copper, lead, zinc, gold. So when those base metal prices are low, or when those mines become less profitable, silver production suffers as a consequence. And right now, we're seeing mine closures. We're seeing production cuts. We're seeing delays in new projects because of permitting issues, environmental concerns, and rising costs. The pipeline of new silver supply is drying up at exactly the moment when demand is exploding. This is what market analysts call a perfect storm, and it's been building for years. Now, let me take you inside the mind of a major institutional investor for a moment. These are the people managing billions of dollars. They have teams of analysts. They have access to data that retail investors never see, and they're looking at the silver market right now with a very different perspective than the average person. They're seeing the supply deficit. They're seeing the industrial demand growth. They're seeing the monetary uncertainty. But they're also seeing something else. They're seeing that silver is still dramatically undervalued relative to gold. Historically, the gold-to-silver ratio, that's how many ounces of silver it takes to buy 1 ounce of gold, has averaged around 15-to-1 over the long term. Sometimes it goes higher, sometimes lower, but 15-to-1 is roughly the historical norm. Right now, that ratio is still elevated compared to historical averages, which means silver has significant room to run just to catch up to where it should be relative to gold. And when you combine that mean reversion potential with the supply deficit, with the industrial demand surge, with the monetary uncertainty, you start to understand why some very smart people are calling this a once-in-a-generation opportunity. But let me be clear about something. This isn't about getting rich quick. This isn't about gambling on some speculative trade. This is about understanding fundamental market dynamics and positioning yourself ahead of a major structural shift. Think back to the early 2000s when China was just beginning its massive infrastructure build-out. Copper prices were low. Most people weren't paying attention. But a small group of investors who understood what was coming, who understood that you can't build cities and factories and power grids without massive amounts of copper, they positioned themselves early, and they made fortunes as copper prices multiplied over the following decade. We're at a similar inflection point with silver right now. The green energy transition is just getting started. Electric vehicle adoption is still in its early innings. The 5G build-out is ongoing, the Internet of Things is expanding, and every single one of these megatrends requires silver. But, unlike copper, silver has this dual nature. It's both an industrial metal and a monetary metal. So you're not just betting on industrial demand. You're also getting exposure to the precious metals complex. You're getting a hedge against currency debasement. You're getting portfolio insurance against financial system instability. It's like having your cake and eating it too. Except in this case, the cake is made of silver and it's becoming increasingly scarce. Now, I want to address something that I know some of you are thinking. If this is such a great opportunity, why isn't everyone talking about it? Why isn't it all over the financial news? And that's actually a great question, because it tells you something important about how markets work. The mainstream financial media tends to cover things after they've already happened. They report on Bitcoin after it's already gone up 10 times. They talk about housing bubbles after prices have already crashed. They're reactive, not proactive. And by the time something becomes a mainstream story, the easy money has usually already been made. But there's another reason silver doesn't get much attention. It's not sexy. It's not exciting. It doesn't have the narrative appeal of cryptocurrencies or artificial intelligence or whatever the hot trend of the moment happens to be. Silver is boring. It's industrial. It's old-fashioned. And that's exactly why it's being overlooked. But the smart money doesn't care about sexy. The smart money cares about fundamentals. And the fundamentals for silver right now are about as compelling as they get. Let me walk you through what some of the major players are doing, because actions speak louder than words. Silver ETFs have been seeing consistent inflows. That means institutional investors are accumulating positions. Hedge funds have been building long positions in the futures market. Mining companies are being acquired at premium valuations. And perhaps most tellingly, the big bullion dealers are reporting unprecedented demand for physical silver coins and bars from retail investors who are starting to wake up to what's happening. This is how major moves begin. Not with headlines and hype, but with quiet accumulation by people who've done their homework. And here's something else that's fascinating. The silver market is actually quite small compared to other asset markets. The entire above-ground investment silver supply is worth maybe $50 billion. That's nothing in the grand scheme of global finance. For context, that's less than the market cap of many individual tech companies. It's a rounding error in the bond market. It's a drop in the bucket compared to global real estate. What that means is that it doesn't take much capital flowing into silver to move the price significantly. If even a small percentage of global investment capital decides that silver is undervalued and starts allocating to it, the price impact could be dramatic. We're talking about a relatively tiny market that could absorb massive inflows. And there are signs that this is already beginning to happen. Pension funds are starting to add precious metals exposure. Sovereign wealth funds are diversifying into commodities. Family offices are building positions in physical metals. The institutional adoption is happening. It's just happening quietly, below the radar of mainstream attention. But it won't stay quiet forever. Because at some point, the supply deficit becomes impossible to ignore. At some point, industrial users start competing more aggressively for available supply. At some point, the price starts moving in a way that attracts attention. And that's when the momentum really kicks in. Let me tell you about what happened in 2011. Silver had been in a steady uptrend for several years. It had gone from around $10 an ounce to the mid-20s. Most people thought that was the top. But then something interesting happened. Retail investors started piling in. The momentum accelerated, and within a few months, silver shot up to nearly $50 an ounce. It more than doubled in less than a year. Now, I'm not saying that's going to happen again. Markets don't repeat exactly, but they do rhyme. And the setup today is actually more compelling than it was back then. Because back in 2011, we didn't have the same level of industrial demand. We didn't have the green energy transition. We didn't have the electric vehicle revolution. We didn't have the same supply constraints. What we have today is a fundamentally tighter market with stronger structural demand and less available supply. And that's a recipe for significant price appreciation. But here's what you need to understand. This isn't going to happen overnight. Markets take time to play out. The supply deficit doesn't resolve itself in a week or a month. This is a multi-year story. And the investors who position themselves early, who have the patience to let the fundamentals work, those are the ones who stand to benefit the most. Think about it like planting a tree. You don't plant an oak tree and expect it to be fully grown the next day. You plant it, you water it, you give it time, and years later, you have something substantial. That's how you should think about silver right now. You're planting seeds ahead of a major structural shift. And the beautiful thing is, you don't have to bet the farm on this. You don't have to go all in. Even a modest allocation to silver as part of a diversified portfolio can provide meaningful exposure to this opportunity while managing your risk appropriately. Because let's be honest, we live in uncertain times. The global economy is navigating uncharted waters. Central banks are experimenting with monetary policies that have never been tried before. Geopolitical tensions are rising. The financial system is more interconnected and complex than ever. And in times like these, having some exposure to real assets, to things that have intrinsic value, that can't be printed or created out of thin air, that's just prudent risk management. Silver gives you that exposure, but it also gives you upside potential from the industrial demand story. It's defensive and offensive at the same time. It's portfolio insurance that can actually appreciate significantly in value. Now, I want to talk about timing for a moment, because I know some of you are thinking, this sounds interesting, but maybe I should wait. Maybe prices will come down. Maybe I should see what happens first. And look, I understand that impulse. Nobody wants to buy at the top. Nobody wants to feel like they overpaid. But here's the thing about waiting for the perfect moment. The perfect moment rarely comes, and by the time it's obvious to everyone that silver is moving higher, by the time it's making headlines and everyone's talking about it, you've already missed a significant portion of the move. The best time to position yourself is when the fundamentals are compelling, but the crowd hasn't caught on yet. When the smart money is accumulating, but the mainstream is still skeptical. When the setup is there, but the story hasn't gone viral. That's when you get the best risk reward. And right now, we're in that window. The supply deficit is real. The industrial demand is accelerating. The monetary backdrop is supportive. But silver still isn't on most people's radar. It's still being overlooked. It's still undervalued relative to its fundamentals. That window won't stay open forever. At some point, the market will wake up to what's happening. At some point, the price will start reflecting the underlying reality. And when that happens, the easy entry points will be gone. Let me share one more thing with you, because I think this really drives home the magnitude of what we're talking about. If you look at the total amount of silver that exists above ground in investment form, coins, bars, ETFs, all of it, and you divide that by the number of people on Earth, do you know how much silver each person would have? Less than 1 ounce, less than 1 single ounce per person on the entire planet. Now think about that in the context of wealth preservation, in the context of the green energy transition, in the context of industrial demand. There simply isn't enough silver to go around if even a small percentage of the global population decides they want some. This is the scarcity dynamic that most people don't appreciate. Silver isn't just undervalued, it's genuinely scarce. And that scarcity is only going to become more apparent as time goes on. So where does this leave us? What's the bottom line here? The bottom line is that silver is setting up for what could be the most significant move we've seen in decades. The fundamentals are aligned. The supply deficit is real and growing. The industrial demand is accelerating. The monetary backdrop is supportive. And the price still hasn't fully reflected any of this. This is the kind of opportunity that doesn't come around very often. The kind where you can look at the fundamentals, understand the structural drivers, and position yourself ahead of a major shift. Not based on hype or speculation, but based on cold, hard supply and demand dynamics. The question isn't whether silver is going higher. The question is whether you're going to be positioned for it when it does. Because once this move really gets going, once the momentum kicks in and the crowd starts paying attention, the opportunity to get in at reasonable levels will be gone. The smart money is already positioning. The institutions are already accumulating. The industrial users are already securing supply. The only question is whether you're going to join them or whether you're going to watch from the sidelines and wish you had acted when you had the chance. This is your moonshot moment. This is your opportunity to get ahead of a major structural shift in one of the most important commodities on Earth. The fundamentals are there. The setup is there. The timing is there. All that's left is the decision. And that decision is yours to make.